Aloha, this is Joshua Hayes at BigWayTrading.com for the October 13th stock market report for October 14th. All right, today the market had a big up day, up 11% on the Dow Jones Industrial Average, um, up 11.6% on the S&P 500, up 11.8% on the NASDAQ, up 12.2% on the New York Stock Exchange. Now, I want to show everybody that on the New York Stock Exchange, the one good news is that volume today was heavier than all the days before Friday. However, Friday, even though it was a bullish session with the reversal, and today would technically be day two for me, the fact that volume wasn't heavier than the day before on the reversal just hints to me that there's something really wrong with this and that this is nothing but a bear market bounce. And this is confirmed on the NASDAQ with lower volume and is even worse on the NASDAQ because I warned all my platinum members and gold members who got videos 2 and 3 on Friday that if volume came in lower than any of the down days or on Friday's reversal, I would consider that bearish. So, since volume came in below all the down days that we had last week and on Friday's reversal day, I would consider today nothing but a bear market bounce. And that goes with the NASDAQ 100 too, which came in below the down days on Monday through Friday. So I'm not very bullish on this bounce at all. And no matter what they say, that there was the Europeans bailout that was helping this, or the bailout was finally recognized by Wall Street and Main Street as being a good idea, that is bull crap. And that crap that CNBC and CNN spits out every day has brainwashed people into believing that this bailout rescue bill can possibly actually stop the downtrend in the market. As you can see, since it's been announced, the market got worse. And I told everybody on Friday that the reversal showed that the reversal to me showed that the market was so far extended below the 50 and 200-day moving average on the downside after 8 straight down days that a bounce was in the cards. And history shows us, if anybody happens to remember January 3rd of 2001, that is when the NASDAQ rallied 14%. Within 1 month, it was able to roll back over, and by a month and 1 week later, the NASDAQ was hitting new lows. So anybody that thinks of a 14% up day is a good thing or 11% up day is a good thing needs to know that historically, only one day, I think out of the last 10 biggest up sessions in the Dow history, NASDAQ history, and S&P 500 history that worked was the 1987 bounce. And what made that bounce different than today's bounce? Easily volume. If anybody can go back to the 1987 Dow chart, I can. And let's go ahead and do that, I guess. Going back to 1987, we can see that after the bounce, or after the big sell-off that we had on this huge volume surge that you can see right here, look at the very next day. Look at volume. Volume is higher than the day before. Volume is higher than the day before. And then the follow-through day, week 1. And then the test of the lows. And in 1987, that was when you first started to feel really good. A lot of charts were starting to show up there, but it failed, which just shows you that it's never best to just go on the market. And then as it gets done with this, finally, it starts to right itself, and it starts to move higher. And notice what converges here. The 50 and 200-day moving average gets closer and closer, gets closer and closer, gets closer and closer. And then finally, look at this. Look at this big move over the 250-day moving average on very large volume. You had a rally right here on 3.81% on volume higher than the previous month. Then on the next day, volume almost matches. 2-day chart, volume in those 2 days are higher than anything since the crash. And then after basing action, you get a move over the 200-day moving average on strong volume. That is not happening now. And let's go to our back to our now. And as you can see on this, let's use the NASDAQ right now. We had a nice up day, but lower volume is not good. The VIX came down a lot today also, by the way, a lot more than it should, which shows that complacency really is still out there. And that's why the put call only hit 1.3 during this downturn, while it hit 1.5 to 1.6 back in March. Back in March here, when a lot of the banks were starting to sell off, the put call hit 1.6. Yet after all of this selling, the put call could only hit 1.3. Folks, that's not bullish. And even though the VIX was able to do something very remarkable and hit the 76 level on Friday without the put call ratio confirming it, it's just a number for right now. So that's all I got to put for right now. I'm going to go ahead and end part 1 here. I am going to have a part 2 for gold and platinum subscribers showing you why we are not going long any stocks for Tuesday. A lot of people can play the bounces. I don't play for bounces. I play for 100, 200, 500, 700%, 1,000% to possibly 2,900%, as was in Taser's case for me. I look for those kind of returns. I'm looking for the big, huge returns, and that's not going to happen right now. And I want to let everyone know out there, out of the 25 stocks I'm short, I did not have a single one give me the full cover signal. So the fact that no stocks gave me a full cover signal and that I'm still short 25 stocks after taking a ton of profits on Friday and Thursday and more this morning and telling you on Friday to take profits, I'm going to hold the 10 to 20% to 25% percentage. Like if I bought 100 shares of Apple, I'm still short 25 shares, for instance. And I'm going to hold that short until it closes over the 15-200-day moving average because the trend is down. My long scans are ugly, and there is no way I'm buying this bounce on lower volume today. This is Joshua Hayes at BigWaveTrading.com saying aloha. Thank you very much.